The reason behind the confidence?
Oh, James, I certainly think the confidence is coming back ahead of the reporting season. I think investors probably confident in the fact that we might start seeing some strong earnings coming through, and we did see that with the likes of some of those companies today. So I think that confidence, as Michael mentioned, certainly being reflected in those volumes, looking very positive. But of course, also in terms of overseas markets, we really did follow on from those positive leads, particularly from Europe, where we did see a lot of those indices all up over 1%. So that certainly flowed across into our market, and of course shrugging off a lot of those geopolitical concerns. That economic data, as well as Michael mentioned, really coming through pretty positively. The best performer really being that industrial space, up 1.8%, and I think that was probably led by that business confidence number coming through ahead of expectations. And of course that property sector was also quite a strong performer after we did see those June quarter housing prices come through. We saw financials and materials, the two biggest sectors of our market, also performing quite strongly. So overall we're off to quite a nice start for the week.
Yeah, and is it a stock that it's performed very, very well, not just in regards to today's session? Can it keep doing it though?
Well, we know it is trading at pretty high PE levels at the moment, and I do think there is a little bit of concern out there that it is looking quite expensive. As you say, it has had a very nice run, but certainly investors seem to have shrugged that off today and really focused on this result and of course the outlook that we've been talking about. And in our view, we actually do think that there is probably some appetite for some... excuse the pun, for some further acquisition potentially from the stock. Of course, they are looking very strong. The key takeaway from today's result, really, as Michael mentioned, has been that strong turnaround over in Europe in terms of those sales momentums, and we really do think that this now opens up a significant opportunity to further expand some of their organic growth opportunities. Of course, we're still seeing strong growth across Australia and New Zealand and that Japanese market as well, but the fact that we are seeing Europe no longer a drag really is a positive for the company, and I certainly think investors probably looking at that and the outlook for the stock probably still looking fairly good, but overall very strong result, and as Michael mentioned, that trading update as well really adding to the strength that we did see today.
Leanne, what if? Not a great result. In the end, net profit down about 15%, as we know, facing stiff competition from the likes of Expedia, but shares actually ended in positive territory.
They did, James. It was quite an interesting one. We did see it trading flat, relatively flat for most of the day, around that $3.30 level, which we know is the takeover bid that's come through from Expedia. So I think looking at that, it reflects that investors were probably shrugging off this result that's come through today and more focusing around that takeover bid that's come through. As you say, though, that result probably was to be expected. Their net profits were down. We did see their revenues up slightly, up about 2.1%. That was ahead of our forecasts and consensus, but again, no dividend declared. So overall, it did look like a pretty soft result. They are continuing to lose a lot of market share across Australia and New Zealand as a result of that increased competition from Expedia and the likes of Bookings.com as well, but also their lack of investment really in a lot of their brands and technology over the last few years or so, which really has had an impact on the stock. But as I said, I think investors certainly did shrug off that result, and it is now all about this takeover bid. I suppose the next question is whether they will in fact get a rival bid come through. We know that they have opened their books over the last couple of months or so in terms of that due diligence, so there still is the possibility there. We probably think it is unlikely, the fact we haven't heard anything prior to or post the Expedia bid coming through. Probably a lot of those companies have in fact passed up a lot of that due diligence that they've had a look at, but I think that's probably going to be the next focus, but probably going to see this stock trading around that $3.30 level.
Michael, we saw it up almost 8% today.
I think it was potentially. We saw a huge turnaround in the stock this morning. When it opened, it was down over 6%. So really saw a huge turnaround, and I do certainly think investors focused on that outlook. We know this stock has been under a bit of pressure. Of course, the sector has been underperforming. It's been down about 23% since the start of the year. But if we look at those outlook comments, they did remain pretty subdued. We actually didn't get too much detail in terms of the numbers coming into FY15, but there really was no evidence of any any further sort of slowdown in demand, which was one of the key factors out of the result. The CEO sort of mentioning that he does think that this may in fact be the bottom of that mining downturn. So looking very positive, also indicating that they should begin to start generating some cost savings, given the benefits of that restructuring that they announced back in May, and that should start to flow through in FY15. We know that they were coming under quite a bit of cost pressure in terms of some of their key customers, particularly given this soft commodity price environment we've been seeing. So I think all of that combining together really drove the performance in the stock today, and certainly that result did look fairly in line with guidance, but that did seem to sort of be shrugged off by investors. It was more the outlook that drove the strong performance.
CBA tomorrow, expectations?
Certainly expecting a pretty strong result to come through, and really flowing on from the strong momentum we've seen following the third quarter result as well. So I do agree with Mike. I think one of the areas we'll be looking out for is those net interest margins, and potentially those bad and doubtful debts as well. As we did see out from that Bendigo and Adelaide Bank result, we saw lower bad and doubtful debts, higher net interest margins, and really that did drive the stock. So I certainly think that will be in focus for investors. We do like CBA, although it does look to be at quite high levels at the moment, but certainly expecting a strong result. I do agree with Mike again. The ANZ Asian growth strategy does look positive, but of particular note, we actually do like NAB very much as well, and think that there is significant growth potential in that stock as well. So probably of the banks, NAB we think it has the greatest potential for growth going forward, but certainly expecting a pretty strong result from CBA tomorrow.